Good morning and welcome to Stock Market Today. It's Monday, January 7th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Hope everybody had a great day. You can follow me on Twitter. I am at Dan Russo _CMT. I'm over on StockTwits at the same handle as well. So getting back into it on a Monday, hope everybody had a great weekend. Stock Market Today brought to you by Chaikin Analytics. You can head over to chaikinanalytics.com/today. Sign up for a free email and follow along with this show. U.S. equities were sharply higher in Friday's trading, with the S&P 500 now up nearly 8% since hitting that low on December 24th. Treasuries were weaker, with yields moving higher. Dollar rebounded on the yen cross, but was weaker against the euro and the pound. Gold finished down 70 basis points, and oil was higher. WTI crude settled up almost 2% on Friday. Your outperformers, tech, communication services, materials, and industrials, while your defensives were your underperformers, REITs, utilities, and consumer staples. I would note that all the major sectors did finish higher on the day. As we get to the desk this morning, S&P futures are down about 10 basis points after that strong move last week. Really, 2 weeks in a row now of good gains for the S&P 500. Asian equities were higher overnight, with Japan a standout, up nearly 2.5%. European markets are mostly lower. Treasuries are unchanged to firmer at the back end. The dollar is lagging on the major crosses, in particular the euro. WTI crude up 2.5%, and gold is adding about 50 basis points here this morning. And what's interesting, though, is despite this big rally, we're really trading into resistance. We rally into resistance is what I'm calling it here today. The February lows at around 25.30 starting to come into play. And really what we have, I think, is this resistance zone between 25.30 and 2600, which is kind of a wide zone. I realize it's tough to make decisions within that band, but it really just is. We have to trade the market that we're given, and that's the market we're given right now. I'd still consider these rallies counter trend in nature. I think that below a declining 200-day moving average with the RSI in bearish ranges really does tell you that we are in a downtrend, and that downtrend is confirmed by momentum. On top of that, even despite this big rally off the Christmas Eve lows here, Chaikin money flow does remain bearish. So nice move off the lows. Good opportunity to have raised some cash. You still may get some opportunities to raise some cash here in the near term, but I do think the rally is counter trend in nature. What I'm looking for is a less intense test of those December lows to give me confidence that a solid base is forming here in the market. From there, we can start to think about getting aggressive on the long side. Right now, I do think it is too early. I will point out this week, two important events going on this week. One for healthcare. It's the JP Morgan Healthcare Conference, largest healthcare conference of the year. You're already starting to see a lot of announcements coming out of that event. Watch the healthcare sector closely this week. And the Consumer Electronics Show takes place this week as well. Could impact a lot of the technology companies in and around consumer-facing technology. And the semiconductor names always have some movement around this event. So your market in a minute. If you're following along in that email at home, here's what I'm talking about in my note to Chaikin Analytics clients today. Payrolls data and Powell's comments spark a rally in equities. S&P 500 testing broken support near 25.30. We hit on that already. Commodities rallying from oversold conditions as the U.S. dollar begins to weaken, and futures do point to a lower open today. Here are your major markets, though, from a power bar perspective. And still, like I said, despite that huge rally where the NASDAQ led, look at this, 4.3% on Friday, all of the power bars for the major markets based on the Chaikin Power Gauge rating are still skewed strongly to the bearish side of the coin. No Dow stocks have bullish ratings. 7 have bearish or very bearish ratings. S&P 500, 13 bulls to 134 bears. More than 10-1 bears to bulls. NASDAQ, 7 stocks with bullish ratings, 24 with bearish or very bearish ratings. Small caps, obviously, continue to be bearish. They have been one of the weakest groups, and they really are the group that was the tell for this move lower. If you were paying attention back in the summer when we started talking about it, tech had a nice day, up 4.4% on Friday, but still, sector has 0 bullish stocks, 16 bearish stocks. According to the Chaikin Power Bar, large cap stocks and small cap stocks are strongly bearish. Major indexes are mixed. Stock of the day today is an interesting one, actually, Toll Brothers, because starting to see some signs of life in the home building and home construction areas of the market. If you look at ETFs like ITB and XHB, ITB is more pure construction, and that's the one that I prefer. XHB has a lot of the supply chain names in there that are still struggling. But Toll Brothers has a bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, as well as attractive financial metrics. Stock does have some negative expert activity, but when we roll up the 20 factors that fall into these four categories, we come out with our very bullish rating. Stock closed at $34.90 on Friday, up 5.12%. Nice steady downtrend. Then we're starting to see some signs of life. A little bit of a stabilization here in the $28 to $34 area, which we're now breaking through. We are above the falling long-term trend line. But look what's starting to happen here. Very bullish rating. Stocks outperforming. Market and model getting into gear. Dynamic duo coming into agreement here. Stock is currently overbought with this nice move higher. And Chaikin money flow, we'd like to see a little bit more positive activity out of Chaikin money flow. But as investors start the new year and look for opportunities and adjust their positions, I think these are the type of names you want to be keeping a close eye on. Name that went from a downtrend to some sideways activity to some strength as it's beginning to outperform is a name that I want to consider on the long side when the situation is right. Strong trend, strong industry group. Right kind of name to be thinking about. I want it when it's oversold, especially because I want to wait for premium setups in this choppy market. I'm adding Toll Brothers to a bullish watch list here today. Sector tracker now, looking at our movement over the last 5 days. Energy, comms, discretionary are the top three. Oil's had a little bit of a rally here. It's taken the energy names higher with it. Commodities in general, which we're going to look at, have had a little bit of a rally here as the dollar has backed off. Remember what I've been saying for the past couple of weeks, if you've been reading my note, I don't want to catch the knife in energy. I don't want to just start buying energy stocks because they're down so much. The quote unquote, they're down so much so they can't go any lower. Yes, they can. We're waiting for stabilization, and we're waiting for signs that that stabilization is likely to endure. One of the things that I look at is the price of the dollar. A lot of people ask me, Dan, you guys do a lot, mostly equities. Why are you writing about the dollar? This is why. Because as the dollar weakens, commodities could stabilize, including oil. And as commodities stabilize, and if oil stabilizes, then we want to look for opportunities in the energy complex, not before. As the markets rallied here off the lows, utilities and REITs have given some back. I personally think at this stage of the game, these moves are counter trend in nature. If you look at the utilities group within Chaikin Analytics, it is now oversold. Rates look like they're ready to still come in. Our industry in focus today, oil and gas equipment and services. We've been avoiding it. You've heard me say for months, stay away from this group. Here's why. It's been a great call. Group is down 31%, underperforming the S&P 500 by 31.71%. Power bar ratio, no bullish stocks. 25 bearish or very bearish stocks. Some of the indicative names within this group, Core Labs, RPC, and Oil States, all have very bearish Chaikin power gauge ratings. Let's take a look at one of them here today. Core Labs. Very bearish stock, weak trend, weak industry group. So at the very least, you don't want to own this stock. You don't want to own it. Not the kind of name you want in your portfolio if you're following our process. Dynamic duo in gear here. Stock's been bearish really since July. It's been underperforming since that time frame, and the intensity of that underperformance has been picking up. Look all along the way, Chaikin money flow has been bearish, and the intensity of that bearish money flow has actually increased of late. Stock is below the declining long-term trend line. It's overbought, so much so that it triggered an overbought sell signal within Chaikin Analytics today. CLB. Look for opportunities to sell it if you own it. Look for opportunities to open a bearish position if you trade to the downside. The dynamic duo is in gear here to the downside. This stock could easily fit the bill for what we call a Chaikin classic bear. It's an angry chart with a lot of red on it here at the bottom. That's what we're looking for bearish ideas. I think you have one here today, CLB. At the very least, it should not be in your portfolio. Now, a lot of movement on Friday in individual names, as you would expect, with the market moving around the way it did, but not a ton of news here. Mattel up 12%, AMD catching a rebound, up 11%. Netflix added to the conviction buy list at Goldman Sachs, up nearly 10%. For those of you who read my bearish insights notes and receive our alerts, I like opening a bearish trade in Netflix with this rally here over the past couple of days. CF, no real news. Varian caught a double upgrade. Went from sell to a buy at a sell-side shop, did not stop at the hold level in between. Sell side of the coin here, just a lot of the discretionary names coming under pressure on Friday. Seeing a little bit of a theme with these auto groups, AAP, O'Reilly, and AutoZone. I really do think that's a function of people positioning and adjusting their portfolios as the new year gets underway. Discretionary's been weak, right? We've talked about discretionary being weak for a while, but within discretionary, these auto companies have been strong. It looks to me like people might just be reweighting their portfolios a little bit. Selling is not that intense, but notable just on a day when the S&P 500 was up over 3%. Gap is a name we've hated for a while. Macy's neutral re-rated stock. Not a ton of company-specific news moving these names around. Now, as I said, 10-year yield testing support. I do think that the path of least resistance for now in the near term is likely lower for the yields. A lot of congestion overhead here. The yields are oversold, so we could see a rally back to the 2.7, 2.75 level, where I think they will fade and continue lower. We are below the 50-day moving average, below the 200-day moving average, both of which are declining for the 10-year yield. There is support here around this 2.6 to 2.63 area. I think that if that's broken, that would be important. Likely lends a bid to the bond proxies within the equity market. That's your utilities. That's your real estate. Remember, I said earlier, utilities are oversold in the near term. Technology rallies into resistance. I don't want to cloud up the chart here, but you can see it. There's this congestion, 62 to 64 on the XLK, the technology select sector, SPDR. What's interesting to me, though, is that the stock, even with the rallies, has not been able to get out of an oversold or a bearish momentum condition. It's not oversold, but the RSI is in bearish ranges here. Still hasn't really been able to get much above 50. That is a sign that momentum is confirming the bearish price activity. XLK is below the 50-day moving average. What's interesting to me, though, is that we're just now testing support relative to the SPY. And this is why the Consumer Electronics Show could potentially be a catalyst this week, especially for the semiconductor companies, which have been holding up, right? A lot of consumer electronics devices have been seeing increased semiconductor content over the past few years. New phones, new TVs, autonomous driving, all the types of items that are going to be on display at this event, and to the extent that they require more semiconductor content or less relative to investor expectations, could really drive trading in semiconductor names today. So we want to pay attention, and this week really. So we want to pay attention to semis. We want to pay attention to tech. Commodities rally from oversold levels. This is the CRB commodity, continuous commodity index. Tested support down here, still below the moving averages, but coming out of these oversold conditions. I do think that's interesting, and I think it's a function of what we're seeing here in the dollar. This is the UUP. It's our dollar ETF. Kind of been chopping sideways for a while and now beginning to break down. Look at the series of lower highs for the RSI and shaken money flow for UUP going bearish here. If the dollar breaks down, that could lend some support to commodities, oil as well. And to the extent that we do start to see some support and maybe even some bids to the commodity complex, that could start to make the materials sector of the market for equities interesting. It is early days. Right now it's just a consolidation, but it's something we are keeping an eye on very closely. So that's it. Sign up for the email. It's called Chaikin Power Feed. Head over to chaikinanalytics.com/today. Follow along with this show. Get daily stock ideas for free. I want to thank everybody for joining us here today. If you like what you're hearing, Help us spread the word. Share our link on social media. Get the news out there. This show airs every day at 9:15 a.m. On stockcharts.com, and we will always post links to the show. Have a great day, everyone.